Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, good evening, good evening, everybody. I'm out of focus. There you go. How y'all doing, man? I ain't gonna be before you long tonight. We're gonna go ahead and get this price action recap out the way. But if this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I also want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just be big spot of you to hablo español. And you're in tune to another episode of the Intraday Price Action Recap. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. The Smart Money Manuscript is your one-stop shop for all things trading and investing. It starts with the absolute beginning before you even get into the stock market, talking about banking and budgeting and taxes and preparing for retirement and how much you need, and it get into what is a brokerage account and what is stocks, what's the stock market, how to trade stocks, how to trade options, how to trade futures, how to leverage with options, how to leverage your futures, how to just everything. It even takes a deep dive into the ICT concepts, all for $69.99. Click on that first link in the description below and cop that. But it doesn't end there. It also includes the Smart Money Mentorship for that same. You don't have to pay no more than that $69.99. But every second Saturday at 12 p.m. Eastern Standard Time, you don't get a webinar. You don't get a pre-recorded video. You get me live, just like I'm live right here. Live every second Saturday at 12 p.m. Eastern Standard Time. You pull up and you ask your hard-hitting questions when it comes to trading and investing. Yes, I know it's unbelievable. I know I know I don't have any fancy plaques to send you. I'm not going to send you a fancy plaque saying that you're a trader now. I'm not going to send you anything at all. I'm just going to be here to hold your hand as you move forward in your trading and investing journey, just to make sure that you understand how to look at them candles and make your trading and investment decisions based off something concrete, something solid, not just a feeling. Oh, I think it's gonna happen. Oh, I think no, something concrete. Yeah. Now, who we got up in here? I'm the biggest bird. I'm the biggest bird. We got Jim up in here. We got Yolanda up in here. We got Kim up in here. We got Here to Learn and Share up in here. We got Honey. We got Tish up in here. Yep. See more numbers than I see names, but them all the names that I see. So them all the names that I'm gonna say. Yeah, yeah, man. Hey, um, for what I'm saying, the people that was people reaching out, somebody reached out to me and say, hey, am I the person that you was talking about that been getting the stuff for free? I don't know. I didn't go through and look at all the names. Once I saw a group that shouldn't be in there, and I saw that person, well, some of those people that was getting on my nerve that was in that group that shouldn't have been in the Discord, I revoked the access. So, like I said before, I don't know if it was you, but you knew it was you. If you were in the Discord and you were not paying a monthly fee, hey, who grandma used to tell him a hit dog a holler? Hmm? Jim, has your grandma ever told you a hit dog a holler? How about you, Yolanda? Your grandma ever told you a hit dog a holler? Tish, I know your grandma told you a hit dog a holler. You from the country. You country as a cricket. Hey, did Price do anything today that caught you off guard? If Price did something today that caught you off guard, if Price did something that you, yeah, hold on a second. Sound like somebody in my yard. Let's see if that's my son. Shouldn't be nobody in my yard right now. I'm not expecting anything. Bartholomew. Yes, Bartholomew is here. When I look at my phone, when I look and find my iPhone, my son, all of his devices say Tim's AirPod, Tim's MacBook. But when it comes to his phone says Henry Bartholomew Dinganut the Fourth. Don't ask me why. Henry Bartholomew Dinganut the Fourth. Hey, y'all, hold on. Bartholomew Dinganut the All right, I'm back. I'm back. Let me check the chat. He said he did it as like a troll. When he initially did it, he did it as like a troll, and it's just been like that. He never changed it. It's been like that for like a few years. He maybe he didn't graduate high school. It might have been like that, maybe about 5 or 6 years now. The name of his phone been Henry Bartholomew Dinganut the Fourth. but he said he did it as a troll back in the day. I think he was like still in middle school when he did it, either eighth or ninth grade. Yeah, but it's been like that for a minute. So when I go in there, I just be looking for Henry Bartholomew. Uh, so somebody said that price just chopped. It's still in the middle of the road. That surprised you? That like like chopping? You saying price chopped? You know, I be actually out there price doing thing to catch you off guard. They didn't surprise you. So when y'all put stuff in the chat, I'm assuming that you're putting it in there because it surprised you. And if it surprised you, right, I'm gonna ask you, what were you expecting? What were you expecting? If the chop slop, if you saying, hey, price chopped, and if you're saying that price chopped, I'm assuming that you're saying the choppy price caught you off guard. All right. And if the choppy price caught you off guard, what were you expecting? Hmm? Shout out Lump, Jada, Seawalk, light skinned Deborah, then popped up in here.
I was expecting for Price to at least close that daily Civi.
You was expecting it to close the daily Sibby.
Mm-hmm. Close above that the daily Civi.
Okay. You want
Not
you was
unless it's trying to play games with us.
so you expected it to be more bullish.
Uh, well, to me it was bullish, but I just felt like it would take care of
So you just greedy. You just wanted it to go farther than it really went.
because it's been in that Civi, what, 1, 2, 3, 4, 5 days.
Oh, so you're not greedy, you just impatient. So you impatient. That's what it is.
No.
I kind of thought it would make a move today since yesterday was garbage. All right. So the comment I just read out, the comment that Deborah shared, all of that is rooted in feeling. All of that is rooted in feeling. We take our feelings, right? Get our feelings like this right here. Let me see something. Feelings, right? Feelings. Take our feelings, ball them up, throw them in the trash when it comes to trading and investing. Now, is there anything based off of technical science, technical analysis that you did your top down analysis and you said, okay, if price did this, then it should do that. And it did something totally different because feelings will get you nothing but hurt, right? We don't never want to look at the charts and solely base what we want to see off of our feelings. We want to base everything off of technical science, meaning if there's if your draw on liquidity is above a SIBI, right? And that swing high, there's nothing up there to stop it from going up there. We've traded up into the SIBI. We traded inside the daily SIBI. We've been flirting around with it, right? And you'd be like, okay, there's nothing else left up there. Price starts to trade into it and it gets right there and then it reverses and come back down, right? You'd be like, I expected it to reach that drawn liquidity because price had left the final stage of accumulation and it was making a beeline for that swing high above that SIBI, and then it turned around and closed below mean threshold. Right. Those kind of things that when I say that price do anything to catch you off guard today. I'm talking about technical things that you did your TDA and you sitting there scratching your head like, man, what did I miss? I thought we was gonna, I thought we was gonna uh, sweep that sell side and go up. We swept that sell side and went down. Like, what did I miss? Right? Y'all get it. Y'all understand. Y'all understand. Because I don't have a crystal ball. Right. There's a lot of stuff that I want based off of feelings, but ain't nothing I can do about that. My fancy dance ain't on. Let me turn my fancy dance on, and we're gonna go ahead and get to it. Follow the bouncing ball. Follow the bouncing ball. Follow the bouncing ball. Follow the bouncing ball. Hey, follow the bouncing ball. Hey, who looked at the videos that Michael shared on Twitter yesterday? If you looked at the videos that Michael shared on Twitter yesterday and you on the tube, put a one in the chat. If you're in the Zoom, unmute and say, yeah, I watched.
I looked for him, but he has so much stuff. Is it on? Is it? I'm assuming. Can I find it on his YouTube channel?
It's on Twitter.
I know. I looked through Twitter, but I couldn't get through everything. I'll go look again.
I mean, it's not on. It's not on YouTube. It's on Twitter. It's like just some videos that he put on Twitter. So it was like
Where
two.
did the one where Tanja Trades was talking? You talking about that one?
No, it was two. It was two or three trade executions that he was in trades and he was talking while he was in the trades. It was like two or three of them, but he was talking about the same thing. He it's basically the same thing that he be talking about, but every now and then he'll sprinkle a little bit more sauce on stuff. And he was just talking about trading every hourly candle. Right. And we've all heard him talk about this before, talking about you trade if you trade the hourly candle, you just treat the hourly candle just like that's your higher time frame. And that's why y'all always y'all remember hearing me say you're trading within the scope of that range that you're focusing on. You don't try to force trades outside of that. If you're trading within this range, you want to look at the sell side and buy side within that range. You don't want to try to force buy side up here when you trade and making your trade decisions based off of this range right here. You just want to look at that buy side, not this buy side over there. And before he talked about it, like in the past, he's talked about trading the hourly time frame and then breaking it down into quarters, looking at every 15-minute candle. What does it do? Does it back in the past? He talked about, is it forming a fair value gap within those 4 15-minute candles? Looking at every hourly candle like that. Is it doing this within them hour? He just be dropping different little things. And then this time he was talking about the first presentation of the hour and just using that just like that's your dealing range. You got your hourly candle, right? The first presentation within that hour, and using that first presentation based off of what is the order flow now. Is it bullish? Is it bearish? You know what I'm saying? And utilizing that first presentation. And that screenshot that I shared from when I was trading pre-market, that's what I was doing, right? That's what I was doing. I said, hey, I never thought, like, I've talked about first presentations during certain times, like pre-market, 8 o'clock. And yeah, I'm looking at it through 7 o'clock, 8 o'clock, 9:30, 10 o'clock. I'm looking at it at every hour, right? But just for some reason, stuff just don't be dawning on me. Like, I'm already looking at it every hour. right? But then just to think about just looking at it for every hour. Yeah, I know that don't make sense. I know it sounds like I'm saying the same thing, right? But I was looking at it at every hour at a specific time, starting inside the New York kill zone, pre-market, 7 o'clock. I'm looking at it there. 8 o'clock, between 8 and 8:30, there's news embargoes, there's special times. 9:30 open. I'm looking at it there. 10 o'clock. That's the silver bullet time. I'm looking at it. I'm on it, like, but I'm looking at it every hour. It never dawned on me that I'm looking at it every hour. And just like that, it just clicked in my head. It made so much more sense. It'd be crazy things, you know what I'm saying? Y'all be thinking, oh, Tim know everything. You know, no, I don't know everything. Right. I know a lot, but a lot of times when something just click, it make it even that much clearer for me. You know, this man been doing this for 30 plus years. You know what I'm saying? I sit there and watch him trade and be in amazement of how he can go in there and put on a 15 contract position with a 6 point stop loss. And price never even get close to his stop loss because he know this so can't, man. I don't care what nobody say. I ain't never seen nobody trade like this. And can't nobody tell me this man ain't got something to do with writing his algorithm. I ain't never seen nobody take a trade with 15, 20, 25 contracts and got his stop loss in some of the most random looking places. And it never goes back to his stop loss. Like, why did you put that stop loss there? Why did you? I'm going to reduce the stop a little. How? Why are you reducing it to there? There's nothing there that says put this stop loss there in my little mind. But he put that stop loss there and price don't never touch it. Comes within one tick of it, don't never touch it. I don't know. All I know is this stuff works, right? Y'all look over there on the chart. I was trading again this afternoon, right? I traded pre-market, right? I traded just before lunch, and then I traded again this afternoon, right? What y'all can see here on the chart now, I don't know if y'all can see it all, right? But this here is the afternoon, right? This is the start of the afternoon session right here, right? Right. That's the start of the afternoon session. Hopefully y'all can see that. Right. Okay, that's the start of the afternoon session right there. This right here. And this right here. Right. That's the opening range high. That's the opening range low. Right. From over here at 1:30 over here to 2 o'clock. Right here. That's the opening range. Right. That's our opening range right there. Okay. So we got 1:30, right? That's the start of the afternoon session. Let's squash this up a little bit so we can see what goes on the chart. Right. These 1 minute candles right here. Okay. 1 minute candles. All right. So now, this right here, I don't know if y'all can see. Let me make sure y'all can see this right here. This right here, let me squash this up small. I got to go to 60 minutes to show you what this is. All right. So this here, let me go back down. 15 minutes. I don't want that to show on that higher time frame. All right. So this right here. Squash this up right here. Who remember what we said about this right here at this lower quadrant of our old 60-day look back? What did we said? What did we said this was potentially what? Talk to me. We said this was what?
Smart money reversal.
Smart money reversal. Very good. We said this was our smart money reversal, right? And that was our smart money reversal, right? And so that being out, once we got confirmation that that was our smart money reversal, right? As we was going over here, we got confirmation of that. So that meant that we were where?
Right side of a market maker buy model.
Right side of a market maker buy model. Very good. Right side of a market maker buy model, right? So we're on the right side of a market maker buy model. Okay. When you're on the right side of the market maker buy model, right? If you are not even don't worry about what you want to do. If you're on the right side of the market maker buy model, you're anticipating price to respect what type of order flow? Talk to me.
Bullish order flow.
Bullish order flow. All right. Bullish order flow. All right. So smart money reversal, right side of market maker buy model, that tells us we should be looking for bullish order flow. All right. So now that we know where we are in price and we know what we should be looking for, right? That gives us a roadmap, right? That gives us a roadmap to try to find a destination. Okay. Now that we know that, okay, and we look up here, this right here is a previous day's high, a prior day's high, should I say? All right, this is a prior day's high right there. That's a prior day's high. This is some buy side liquidity. All right, you got some buy side liquidity there. All right, buy side liquidity. And why am I looking at these right here? Why am I looking at that buy side liquidity and that prior day's high? Why am I looking right there? Why do I have those marked out? We talked about it the other day.
Relatively equal.
Well, what did we just said? What's all this? What all this stuff we said?
The market maker model.
Yes, it complete because we completed one market maker buy model there. Coming here will complete that market maker buy model, right? Then coming up here completes our overall market maker buy model, right? So looking at that right there. Why? Because we're on the right side of a market maker buy model. Bullish order flow should stay intact, at least until you complete that market maker buy model, right? And ultimately this one here, All right. So for right now, until you complete that, you look for bullish order flow. Okay. And that gives you a bias. That gives you something to be looking for. So what if you're bullish, right? If you're bullish, what are you looking for? You're looking for two things. If you're bullish, you're looking for one, a sweep of what? Talk to me.
Sweep a sell sign.
You're looking for a sweep of sell side, and then you're looking for an opportunity to do what?
Buy.
Buy where?
Any discount.
Buying a discount. Very good. All right. So now you got a whole plan. You got a whole plan mapped out for you, right? Why is that? Because you know where you are in price, you understand order flow and price delivery, and you understand based off of um, the power of three that the algorithm is going to manipulate before it distributes, right? It's going to manipulate before it distributes. That's why you're looking for that manipulation of the opposing liquidity, be it buy side or sell side, and then you're looking for your opportunity to participate in a discount or a premium, be it bullish or bearish. Okay. So when we're looking at price, before we get into all that stuff I had over there, right? Okay. Let's do this right here. We're going to come right. That's 9:30. Let's just go to 7:30, 7 o'clock. We'll go to 7 o'clock. You know what? I'm just going to go to 9:30. Well, I go to 7 o'clock right there. Start my little pre-market thing. And then let's mark 9:30. Move. Got too much going on. This other stuff. Let's see here. Yeah. Don't need none of that. Don't need none of that. All right. For what we talk about. Don't need none of that for what we talk about. All right. We're just forgetting about all that other stuff. Okay. We already identified where we are in price. We know we on the right side of a market maker buy model, right? All of that. So here's 7:30 a.m., right? Tim, how do you see it before it happens? How do you say? Oh my God. How many times do I have to say it? Just like that. Just like that. Let me change this. Make them look different. All right. That's the PM. 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 Okay. So, right. Here's 7 o'clock. Starting out in New York pre-market. All right. 7 o'clock. Here. Wait a minute. Let's do this right here. Let's do this right here. checking out what are goings on here. All right, 60 minutes. All right, 15 minutes. You know what? I'm gonna do it like this right here. Instead of making that box, I'm gonna come here, get some quads. Quad city DJs. God can it roll? Let me see. Touch her roll. Roll the tussy. Roll the do the tussy roll. Roll the tussy. Do the tussy roll. All right. So, okay, we got that up there. We got that up bar. Okay. 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 All right. Damn. Why'd you put that on there? Because you always want to identify where price is going. Okay. 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 All right. So we have our pre-market start, right? We have this Sibi right here. All right. Who remember what Sibi this was? Who can remember on that 60-minute time frame? What Sibi was this? Let's go back and look at it. Look at it together. We all want to be on the same sheet of music. Same sheet of music. All right, right here. Right here. What Sibi is this right here?
The first.
Yes, that first Sibi right there when we're coming out of this area and then breaking through this little balance point. We came down, we paused, displaced away, right? So when we come back up above that Sibi there, right, getting us a change in state delivery, right? We're looking for that to act as an inversion fair value gap. That's why he's marked out right there, right? Because why? Why are we looking for it to act as an inversion fair value gap? Because what? Because we're where?
Right side of the market maker buy model.
Very good, right? We got us a roadmap, right? We have a roadmap. All right. So now that we have our roadmap, right? Let's go back down to our 15-minute time frame. Matter of fact, we can go to the 5-minute. I'll stay on the 15-minute. 15-minute is 5 minutes cool. What y'all want to stay on? 15-minute or 5-minute? What y'all want to be on? 15-minute or 5-minute? Or do you want to go all the way down to the 1 minute? Let's see. Is the 1 minute too jumbled up? Dude, the 1 minute got too much going on. Let's go to the 1 minute. Because the 1 minute got some stuff that we need to talk about. All right. So, and we just look at it a piece at a time. So let's look at it. We're gonna break it down. Break it down and beg like James, right? So we're gonna look at that's the pre-market. We're gonna go from 9:30 to 12 there for the New York session. And then, yeah. And then we're gonna go from 7 to 9:30 for the pre-market. And then the Tokyo, we're gonna go to, well, no, we just do Sydney. Sydney is already there from 13:30 until 1600. Okay. All right, so boom shakalaka. Got some overlapping stuff here. So let's come here and put this text, center the text there so we can see these different Um,
So our range is from 7 to 7:30
the
opening range. Is that
yeah,
what is
yeah,
that what we're
7.
going to be working with?
No, we're working with from 7 up until noon.
Okay.
We're going from 7 a.m. up until noon. So this right here is the pre-market from 7 to 9:30, and then from 9:30 to noon for the morning session. So pre-market here, then morning session there. Right. For clarification. Thank you, Mark. Was that Marco?
Yeah, it was.
All right.
All right, so but we're setting our range within this hour, right? 7:30.
You got an opening range 7, 7:30, 8, 8:30, 9:30 to 10, 10 to 10:30. All right.
So since we know where we are at those hours, we should be looking for certain moves based on where the money is, or the liquidity and imbalances, correct?
Yes. Yes. You're looking at, so if you're only trading with the bias, like right now, we know we're on the right side of a market maker buy model, right? And if you're only trading with that bias, right, you're looking for um sweep of liquidity, buying opportunities, and a discount, right? Whatever that looks like. On, you can use lower time frames, higher time frames, whatever that looks like. And you want to be able to identify the buying opportunities when you're looking back through price. You want to be able to identify buying opportunities based off of what the candle's doing, because the lower time frame is going to be showing you PD arrays that you can be focusing on if you want to use a particular PD array, right? But you don't always need the PD array if you understand what price is going to do, right? Because a lot of times I'll buy or I'll sell based off of, once price respects a PD array, then I'll just enter, because I know price shouldn't go back to this low, or shouldn't go back below that order block, or shouldn't go back lower than this fair value gap. You know what I'm saying? Like a lot of times I'll wait for the confirmation, and then I'll get what Michael calls a close proximity entry, right? Um, so we're on the right side of a market maker um buy model. Okay. So here we are in the pre-market, right? So here we are in the pre-market. So if you trade during the pre-market, right? If you trade during the pre-market, come over here, we'll just look at the pre-market, right? Right. Looking at the pre-market here. Okay. So when we come into our pre-market time here, right? Here, 7 a.m. Okay. And then if we look at from 7 over here to 7:30, right there. Okay. From 7 to 7:30. That's our opening range right there, from 7 to 7:30. Right. Let's come over here. Right. 8, 8:30. And then over here, 9:30. All right. Okay. So, right. But Tim, why did you mark those out? Right? Because when we're looking at those opening ranges, because those opening ranges is an algorithmic time. I mean, an algorithmic high and low, a high and low that the algorithm understands based off of algorithmic principles, right? Based off of algorithmic principles. All right. So when we look here, all right. So looking at okay, looking at our pre-market time here, and matter of fact, let's do this right here. Oh, too far. All right. That's 1 hour. That's an hourly candle right there. All right. That's an hourly candle right there. So let's look at this in the sense of just the pre-market with the opening range and then, everything that's going on in pre-market. Then we're going to look at it in the sense of this 1 hourly candle. Okay. So this is our high. This is our low. This is our high. This is our low. That's our initial dealing range right there. Right. For this time frame there. That's our high. That's our low. All right. So then within these 30 minutes right here. Now, what did we say? We said price was in a buy program. We said that we was on the right side of a market maker buy model, right? Being zoomed in, right? Being zoomed in on price, just like this, looking from 6 o'clock up until the what's the name is over, right? Up until here, right? We're going to ignore all of this over here. Right? We're ignoring all of this right here. Right? At this point in time right here, right, does price look bullish or bearish to you? Just looking at the charts, does price look bullish or bearish?
None of the above.
Huh?
None of the above.
None of the above? Okay. We got a none of the above. Does price look bullish or bearish? Right here. Ignoring all of this over here. Looking from here, from this time over to here. Everybody saying neither. Everybody saying neither.
Bearish.
We got 2 people that said bearish. Why do you say bearish? And why do you say
Looking
neither?
at that dealing range, it looks like we're looking at that higher high, that swing high to the swing low. Yes.
Mm-hmm. Yep. Very good. Looking at this fractal of price right here. Right. Just looking at this fractal of price from here to there. Price has given you a bearish signature. All right. We was here. We went up and we came down. What is that? Right. Here, up, down. What is that? What signature is that? Up, down, buy side, sell side. What is that?
Judas swing.
That's a bearish Judas swing. All right. That's a bearish Judas swing. Buy side, sell side. Okay. So right here, with all this right here, at this point in time, right there, price is respecting bearish order flow. All right. What we did here. Went up, took out buy side, came down, took out sell side, right? Failed to take a high. Traded up to the PD array, right? Failed to take out the high, failed to take out the high, failed to take out the high, right? Price is respecting bearish order flow up into here. So at this point in time, right, price looks bearish right here. That's why I say it's being zoomed in like this without having our roadmap. It can trip you up. It can trip you up, right? Because if you don't have your roadmap, okay, if you don't have your roadmap and you see price is respecting bearish order flow, and then we come up here and we drop down and take out these lows, right? It can be very tempting to try to short off one of these SIBIs, especially this SIBI right here. It can be very tempting to try to short off of that, right? Because this one here is inside of the balanced price range, and this one here is the SIBI that's in the premium of this move right here. All right. Come here, line up with the low right there. Yeah. And the premium of the move, and this right here is inside the balanced price range. So you don't want to see price chewing back through that balanced price range if you're bearish, right? So it can be very tempting to want to short right there. And then if you try to short right there, it gives you a little glimmer of hope on that 1 minute candle there, but then you quickly got your head bust, right? Why? Because you're too zoomed in and you don't have a roadmap to let you know you're on the right side of a market maker buy model. Okay. Okay. And you're not paying attention to the fact that you've established your initial dealing range inside the pre-market, right? You've established your initial dealing range, and now we've just engaged, right, sell side liquidity without creating any displacement beyond it, right? Poke below it, poke below it, poke below it, poke below it, poke. We just manipulating that sell side, right? Just manipulating that sell side right there. So we're not displacing through that sell side. So now we're getting a manipulation of sell side on the right side of a market maker buy model, right? What do we want to see when we're on the right side of a market maker buy model? A manipulation of sell side and an opportunity to buy in a discount. Okay. Opportunity, manipulation of sell side, opportunity to buy in a discount. All right. So now you say, Tim, where's my opportunity to buy in a discount? Right. Got a heap of them. Right. Come down here. We drop down there. Right. Go below the sell side there. Right. Then we drop below that low right there. Okay. Come back up here. Then we create a low there. Right. Then we come here. Trade all the way back up above these here. And then you come here, trade back down into the propulsion block there. Right. Dilly dally over there. trade back down, right? Once again, propulsion block, last down close candle of the order block right there. So you got an opportunity here. When you trade back down into the order block, then come over here. You got an opportunity here. When you trade back down in the order block, this here would be the more preferred entry, right? Why would this be the more preferred entry, right? Who can tell me why this over here on this 948 candle, why would that be the more preferred entry than over here on either one of these, this 940, 41, 42 candle? Why would this be the more preferred entry trading back down than any of these over here? Hmm? It has something to do with you're coming up on a time when you anticipate price to do something.
Macro?
Yes, you're coming up on a macro time, right? You're coming up on a macro time where you anticipate price to start spooling. Okay. So when you're anticipating price to start spooling at a certain time. So when you, here we go, right? If you're trading off of the order block, right? Once we come here, right? We come down here into the order block, right? Dip down, trade back up, then we drop back down one more time into the order block. We're not showing the willingness to take that low there. These candles here have already taken liquidity, right? So during the macro's job is to do what? Right? What's the macro's job? Start spooling toward what? Two things, one, two, or both. Right? Start spooling towards what?
Liquidity?
Liquidity or
Imbalances.
Imbalance.
that have not been what?
Reached.
I'll take that. Liquidity or imbalances that have not been engaged, have not been touched, have not been, and at this point here, right? We cannot say mitigated. Mitigated is not a term used in ICT concepts. Right? Right here, we have engaged the initial sell side for our range. Right? So since we've engaged a algorithmic liquidity pool, and now, right, we're getting ready to go into a macro time, and we've been not showing a willingness to take this out, right? That's why I say here, when we come down into this would be the preferred entry over these, because now it's getting ready to go into the macro time. And so now you're anticipating price to start spooling. So if it wants to run without you, this gives you an opportunity to get in. If it wants to take, like it did here, if it wants to take off without you. That's why I say this would be the preferred over this, because over here, right, you have to sit in there longer. Okay. You got to sit in there longer, and, it just be a little bit more uncomfortable. Okay. So manipulation of sell side, right? Opportunity to buy in a discount, right? We went up, came back down, went up. Okay. Got another opportunity at the order block right there, right? Got an opportunity at the order block. And when you look from here up to where you anticipate going, right? Order block right there at equilibrium. Okay. Order block right there, equilibrium of the overall range right there. Okay. So this ain't the best entry, right? But you got order block entries here, order block entries there, based off the same thing, right? Manipulation of sell side, opportunity to buy in a discount. This right here is opportunity to buy at equilibrium, right? If we go down to a 15-second chart, right? Go down to a 15-second chart there. Right? You can see all kind of different opportunities there, right? You got fair value gap opportunities here at the 942 candle right there, right? Then this one here, we came back down into the higher time frame order block, right? See how we stopped there, traded into the rejection block. The bodies are respecting the order block there, right? This order block, this propulsion block, right? But they're all sitting right there on that line. Bodies respecting it, dipping into the rejection block, right? And going on, right? 15-second chart giving you like a smorgasbord of entries, right? You got a fair value gap retracement here. You got a fair value gap retracement here, right? After we displace up, come back down to the fair value gap, right? You got your V shape here, not anticipating price to come down here. You want to see that remain as a breakaway, trade down into that there, then go, right? Smorgasbords of opportunities there. Then over here at our, this right here is inside of our 1 minute order block there, right? See the opportunity over there. Okay, this is on a 15-second chart. So it's the same thing. You look for a manipulation of sell side, opportunity to buy at a discount. Now, like we said before, looking at this as this hourly candle right here. Okay, this is our hourly candle. So now looking at this as an hourly candle, right? We look here, right? We looking around, looking around, looking around, and then we notice that here, right here, once we get here, we start to displace down, come below here, right? We got us, right? And this is our first presentation fair value gap right there inside this hour, right here, right down there as we're coming down out of this area here, right? Right there, displacing out. It's in connection with that low right there, right? So we're breaking outside of this area there. First presentation there, right? And this is when we're creating a range. Look what we do here. We go up here, trade up there, set relative equal highs, start displacing down, taking out the low, create the first presentation right there, right? Trade back up into it, right? Drop down, taking out the low, right? Coming down here and creating the low of the day, right? This right here is where I was trading it in this morning, right? During this time here, while I was trading it this morning, we had 6 o'clock. I was looking at 6 o'clock and 7 o'clock. I believe I was. Let me see here, because this is 6 o'clock here. Yes, it is, right? Because they was in line, right? This is the 6 o'clock. First presentation there. Come here. Right there, right there. So 6 o'clock, we start here at 6 o'clock, drop down there, right? We start here, we blast off there, right? Got our fair value gap there, right? And then if we look over here at 7 o'clock, right? And we look over here at 7 o'clock, this right here is the first BISI that was created before we went up there, came down, got the change in the state delivery, right? And then going to 7 o'clock, when did we create right there? Our first presentation at 7 o'clock. So I'm selling that. Why am I selling that? Because it's in confluence with a high probability inversion fair value gap overlapping with a bearish fair value gap, right? When I'm looking for price to manipulate sell side, right? When I'm looking for price to manipulate sell side. So selling off of there, and then we're dropping all the way down, coming down into our bullish order block right there. And we got a swing low right here, right? That swing low right there. Right there. Okay. So, Tim, but you're selling. Again, when you understand order flow and price delivery, you can choose to trade against the grain, right? And that was opportunity to trade against the grain. All right. So now that we understand this opportunity to trade against the grain there, right? Now that we've set our low and set our high, right? As we're coming back up here, right? Once we get here and start using it for support and we don't take out that high right there, right? Now we're saying, okay, we're creating relative equal highs. Now I'm looking for a manipulation of sell side so that I can have an opportunity to buy, right? Because we've set our range. We're refusing to take out the high based off of our inversion fair value gap, right? It's our inversion fair value gap here. First one as we went down, handle business, right? We're refusing to use it to take out the high. Okay. Now we're back up here. This was right here. This was a inversion fair value gap. So now we're back above it and it's a reclaimed fair value gap, but we're refusing to take out the high. So what does that mean? We're engineering liquidity. Okay, since we're engineering liquidity on the buy side and we're on the right side of a market maker buy model, now I want to see the algorithm manipulate sell side, then give me an opportunity to buy back into this engineered liquidity over there. So now we've looked at the same thing based off of just the time frame of after 7 o'clock and the dealing range, and we looked at it as 1 hour and another hour going into another hour. All right. Using the same concept inside the time, the aspect of a 1 hour candle, right? Based off of what's happening at this 1 hour candle and just connecting them together and seeing the confluence, right? Looking at the confluence to help support the idea of taking a quick scalp short, right? Then after the manipulation, what do? We come back here, right? And we touch this, drop down, right? So now we want to see this be used as an inversion. We want to see this be used as a reclaim. Why? Because we're on the right side of a market maker buy model. So we want price to get above them and go up, right? And when we come here, what is this? We're inside of our macro time. We're not looking for a whole bunch of shucking and jiving. And what do we get? Right? We come here, right? We touch it, back up off of it, trade back down, go below the closing price of the order block, right? That's a good thing to see when you want discounted prices, right? So we come below the closing price of the order block, then we rally up, poke above the high, right? Close above consequent encroachment, close above the inversion fair value gap. Then we come down and barely kiss it. Just institutional order flow, entry drill, and rally up into the buy side. All right. All right. Same concepts that you use on a daily time frame, hour time frame, minute time frame, 15-second time frame. When you understand the order flow and price delivery, right? You can pick and choose how you want to interact with price, right? You can pick and choose how you want to interact with price. Now, looking at what we had going on throughout the New York AM, right? Looking at what we had going on throughout the New York AM. This right here, right? This was, what were these? Those was the 7 o'clock first presentations, right? Those were 7 o'clock first presentations. Okay. So now, once we went up there, did whatever we had to do, right? We're coming into 9:30 now, right? Remember we said we want to see a manipulation of sell side and an opportunity to buy if we're only trading with the narrative, right? So we come here 9:30, right? We take off, right? And we come up here into this, what was that? That was a fair value gap over there. It was a SIBI, I think. I think it was a SIBI, right? We come up here, start engineering liquidity at the lower quadrant, right? We go up here above consequent encroachment, right? Trade up and we drop back down to the lower quadrant, right? Go from the upper quadrant back to the lower quadrant inside the fair value gap there, right? Come back up to the upper quadrant. Then we drop down, right? Take out sell side. What do we drop down into? Our first presentation from 9:30, right? I took a long off of that right there, going back up, right? This morning, took a long right there, going back up. In fact, I was on Tremaine's live stream, and when price broke down here, right? Because he wanted to get this sell side down there, right? And I was like, we trading down into that first presentation. I ain't shorting. I'm getting long, right? So I didn't take it off the first presentation, right? I took it here when we traded down into that order block right there, right? I'm there into that order block, taking it back up. Why is that? Because we got a manipulation of sell side. See here, we drop down, see that little wick down and wick back up there, right? I'm like, okay, we're manipulating sell side. If we defend the lower half of this first presentation, I'm getting long. Defend the lower half of the first presentation, create an order block, trade back down to that order block. Let's go. Right? Why? Manipulation of sell side, right? Opportunity to buy in a discount. Right? What discount I'm buying in. Right? We're trading up, come back down right there. Right? Because we was coming down here. Right? It was coming down there. We're not showing the willingness to go up. So we start coming back up here. All right. I'm buying there. Right. Off of there. Opportunity to buy in a discount. Manipulate sell side, opportunity to buy in a discount. All right. So once we
I
come
see
up,
why you bought there. Well, what made you, because we took that whole range, we took some buy side, and then we broke structure. What made you think that 9:30 to 10 opening range, since we had already taken the buy side, what made you not think that would hold as a breaker and come take
this here,
the lower range? Yes. Did I miss it? Or that's
remember,
what I say. I'm trying to find those little
remember,
nuances.
remember what we talked about when we first came in?
I know we on the right side. Oh,
Mm-mm.
okay. Oh yeah,
Look,
yeah.
yep.
Okay.
When we go back to
Okay.
our higher time frame like this right here,
Yeah.
right? That right there. That's that's what we're looking for. That's our inversion fair value gap right there on the hourly time frame, right? We're above that.
Okay. All right.
right? That was our inversion fair value gap. We're above that. So here we are. We closed our 9 o'clock candle there, right? And then our 10 o'clock candle, we're coming back down inside that right there, right? This drop down right here, that's coming back down. I think that's the drop that's coming back down into that first presentation right there. Let me put a line there right at the beginning of 10 o'clock. Now we're going to go back down to our 1 minute time frame. All right. Yep. There she blows right there. Yep. That's the drop down right there into that first presentation. Right there. All right. And that where we at? 9:30. Is that it there? Oh, here it is right here. Right here. So that's, yeah, at 10:30. Because I said it was a 10 o'clock candle right there. So 10:30 right there. That started the 10 o'clock candle right there. 10:34. Right. That's that drop down inside that 10 o'clock candle. Because we got the closure back above there. So now we got our inversion fair value gap. And we're above it. We're anticipating this to act as support. Right. We're anticipating this to act as support because we got buy side up here. Okay. Do we got to get there? No. We got buy side up there. Do we got to get there? No. You're anticipating this to act as support. So when it comes down into, right, we came down and touched the inversion fair value gap coming below that low, got a nice wick off of there, right? Showing stop runs manipulation. Okay. Then we come here and we drop back down and we respect the lower half of the first presentation, right? That's an important PD array, right? So we come down, we respect the lower half of the first presentation, create a bullish order block. So now it's showing me I don't want to go below, right? I can't even make it to consequent encroachment. I'm respecting the wick, and now I'm creating a bullish order block, right? So boom, right there. And that's what makes me trust it, because our higher time frame has a reason to support price, right? And we've come back down into this first presentation. That's an important PD array that the algorithm left behind. So when it comes back to it, I'm looking for how is it using it, right? It's got a bullish first presentation. We're in a buy program. We're above it. It's in confluence with the inversion hourly, right? So now all of this is bullish confluence. So when we come back down to it, you can buy it as soon as it touch it, but I'm looking for the extra confirmation because, right? I'm looking for the extra confirmation because we have relative equal lows down here, right? And price is dropping from a 15-minute SIBI up here, right? So I'm looking for the extra confirmation. All right. Makes sense of why you say what makes me trust that, and like that breaker not gonna hold. Do it make sense? This is a 1 minute breaker coming up against an hourly inversion fair value gap in confluence with a 1 minute first presentation. Make sense? Okay, take that as
Yes,
yes.
thank you. Yes.
All right. So now, right now that we see that, right, a way to buy here. Okay. So then we come up here, come to the high of the SIBI, right? Taking out buy side, right? Then we break down here, taking out sell side. And what don't we do this time? Right? What don't we do this time right here? We don't defend the lower half of this first presentation, right? So since you're not defending the lower half of this first presentation to take us back up, right? Again, when the bullish PD array that's designed to take us back up is not showing the willingness to do that, and you're in a buy program, what do you want to see? A manipulation of sell side. Right? It's giving you a clue. Hey, I'm not ready to go back up off of this. I'm going to get some more gas money. Right? Where's the gas money? Remember those relative equal lows we was talking about earlier? Right? Come down there, take out those relative equal lows. Once we take out them relative equal lows, right, we get us a nice little V shape off of there. So now you don't want to see price coming back down here. These are the trap traders right there on the breakout. You don't want to see price coming back down there. All right. I mean, what I always talk about when you got an order block coming out of somewhere, right? So now we're looking at an order block to there. All right. Now we come back here. Once we trade up here, right? Once we trade up here, make that high there. Look what price comes back down to. Right back down, right? To the, remember those first presentations from like 6 o'clock and 7 o'clock, right? All right, there. Using them as a reclaimed and an inversion once again, right? Trade back up. We come up here to that upper quadrant, right? What can we anticipate during when we reach that upper quadrant? A deeper retracement. We drop back down, right? Take out what? Short-term sell side right there. Stop at that lower quadrant of our dealing range right there. This right here is 949. What comes up next? The macro time, right? What's the macro job, right? Spool toward liquidity and imbalances that hasn't been touched. We just took out sell side going in there, right? So we rally up here, right? Take out short-term buy side, retrace back down into our balanced price range right there. BISI and SIBI combined, rally up, right? Take out the high, right? Come back down into the rejection block right there. Rally up here, come back down into the fair value gap right there. Rally up, right? Climbing back out. Okay, climbing back out. And climb all the way back out, come up here to that lower quadrant, right? Now we're going to this lunchtime, right? Going over into the lunchtime there. And we come over here to the afternoon, okay? Come over here in the afternoon. Once we get over here to the afternoon, we are, this is 1 o'clock, right? Right there, you see I got the first presentation of the 1 o'clock candle right there. That's my first presentation of 1 o'clock. I got this set on 1:30. Right. This is 1 o'clock right there. Right. And that right there is the first presentation from 1 o'clock, right? Because I'm looking at it inside the hour. Right. So we got our first presentation from 1 o'clock. We go here, right? We trade back down into the first presentation from 9:30 and that hourly inversion fair value gap. Remember that confluence we was talking about, right? Now time is in effect, right? We're here at 1:30. We're in the afternoon session now, right? Inside the afternoon session, we come down and set our low where at our inversion fair value gap and our first presentation from this morning. Set the low, right? We rally up here, right? Taking out that high and set the high, right? Now that we've come down to our anticipatory reactionary point, right? Not only did we come down to our anticipatory reactionary point, we swept liquidity right here, right? Then we rally up, took out the high, right? And now we're above our first presentation after reacting off of a higher time frame PD array, right? We come down below the sell side, rally up, right? We don't want to see price coming back down here, right? Don't want to see price coming back down here. Here's our order block coming up above all this right here, right? So we're looking for opportunity to trade in this range, right? Got an order block there, fair value gap there, fair value gap there. Trade all the way back down into the order block. Not only do we come to the order block, what do we come to? Our first presentation right here, right? There, dip down below, consequent encroachment, push back up. This time here, can't even make it to consequent encroachment, right? And rally up, come all the way up here, right? Taking out that high. Right now, we're going into the 2 o'clock time frame, right? This is our first presentation after 2 o'clock, right? Once we do that, we poke above that high. When we trade it up here above that, we poke above that high right there. Okay, we drop down, right? We set a low right there. So now we got a high and a low. During this time there, we're coming down into this first presentation there, right? This is our first presentation from 2 o'clock, right? So we rally up there. What do we do here? We poke above that high, right? Boom, poke above the high. So that's our, right? That was our highest high, and that was our low, right? We come up here, we poke above our high, right? Reject off of it, right? Come down, we break down, we come down here, right? As we're coming down there, right? What do we stop? We stop at our order block right there. We don't even, well, we look like we might have made it to the propulsion block. Let me get a line there. Nope, we didn't even make it to the propulsion block. Yeah, we actually did. Yeah, it looked like we might have touched it. The close of that candle there is 578.50, and the high of that propulsion block is 578.50. All right, so we come down, we retrace back down into the order block, right? Then we rally up, right? And what is this right here? What is all this? This is high resistance, right? It is high. It's not seek and destroy. It's just high resistance. Okay. And in high resistance, what do? We have deep retracements. Where do the retracements typically go back to? The order blocks and the rejection blocks, right? Come back to the order blocks and the rejection blocks when you have them deep retracements, the high resistance. Okay. And once we come back down after we took the buy side, right? We came back down to the order block, right? Once we came back down to the order block, what do? We got back above this first presentation, right? Did not defend the top, right? Got to the upper half, took off, left it, right? And then even later through the day, right? At the end of the day, what do? Come back using that support throughout the rest of the day, right there. Then we opened up, had a gap up, and went up there. Right. Now we've come back now, taking out those relative equal lows right there. Right. Same concept, no matter what time frame you're using, no matter, it's the same principle over and over and over and over and over. Right? Same principle over and over and over and over and over. Like I said, we sprinting now. Right? We sprinting now. I didn't do a pre-market analysis today. I sat down, turned the mic on. I was about to do it, but I said, you know what? I'm not gonna do one today. Why is that? Because I don't want y'all to depend on me. Let me go full screen and say this. I don't want y'all depending on me for your pre-market analysis. I don't want you chomping at the bit to say, oh, let me see what Tim looking at today. You should look at price action and know exactly what I'm looking at. All right. You should look at price action and know exactly what I'm looking at. because I've never come out and said, oh, this the only thing I'm looking at today. I'm only bullish. I'm bullish on the day. I'm bearish on the day. I'm bearish on the week. I'm bullish on. I'd be like, nope. We're in this time frame in a market maker buy model. This time frame in a buy program. This time frame in a sell program. For intraday, this is invalidated here. This higher time frame, we drawing here. Intraday, we going. I'm always looking at what price is offering, and I'm trading what's right there in front of me. I'm a day trader. I'm a scalper, right? So you should automatically know what I'm looking at. You know the time frames I'm looking at. You know the time windows I'm looking at. You know the liquidity that I'm looking at, right? You know when I'm going into the New York session, I'm looking at the pre-market. The prior New York session, the regular trading hours, buy side and sell side liquidity, whichever one we in close proximity to. That's what I'm looking for buy side and sell side liquidity. That's what I'm marking out. I'm marking out the pre-market high and low, right? I'm looking to see if we're in a buy program or a sell program going into the 9:30 open, right? I'm looking at what price has done overnight. Has price been bullish or bearish overnight? Are we in a premium? Are we in a discount? Y'all know exactly what I'm looking at. Same thing every single day. Looking at the same thing every single day, right? Don't overcomplicate it. Don't make it super hard, right? And then trade what you see. You see how we just sat down and walked through the price, and you see how price did the same thing over and over and over and over, right? Even when it's high resistance, you see it's still doing the same thing over and over and over and over. But when you identify, okay, we in a high resistance or low resistance conditions, okay, now I know what I can anticipate. I can anticipate deeper retracements. I can anticipate overlapping candles because we're in high resistance, right? It's getting ready to go into a macro time. I can anticipate price to start spooling, especially if I'm on a 15-second chart, right? I'm on a 15-second chart, so I can expect price to start spooling toward some liquidity that haven't been touched. Are we in a buy program or a sell program? If we're in a buy program and the sell side has not been manipulated, I might want to wait for the sell side to be manipulated before, doing something. Is it always going to manipulate during the macro? No, but if it hasn't been manipulated, right? Okay, let me wait a second and see if it wants to manipulate in this macro. If it's already been manipulated and it's not showing you a willingness to take sell side again, you see it respecting the discount portion of PD arrays. Now you're like, okay, we already manipulated sell side. Let me go ahead and get in. So if it blasts off, I can be a part of the move, right? These are things that you want to think about. These are things you want to keep at the forefront of your mind when you're watching price. I hope y'all got something out of this, man. I really hope y'all got something. If ain't nobody getting nothing out of it, I know my dog Sherwin got something out of it. I know Sherwin understood everything I just said. Unless light-skinned Deborah got the AirPods in and trying to gatekeep
No,
the
this is
information.
beautiful.
Trying to gatekeep the information.
I do
Never
have a
find one,
question.
Tim.
Say what?
I say it's number 5 when I got to go back and look at this one and take my notes. You put a checklist. You just said the whole checklist right there. So yeah, I'm gonna have to go back with my notes.
Yes, sir.
Thanks for saying that. I'm going to delete it just because you said that.
You better not.
You better not. Hey, man. Do anybody got anything for me? Did y'all
I
find
got
this
a
helpful?
question.
Yeah, go ahead.
I did find it helpful, but I know you said typically you get 10, 15 points, you out of there, but obviously you held longer today. So was it because you were confident in the trade you in was gonna go to your target that you didn't mind Do you get any drawdown or during your trade or?
I've been, I have like certain accounts where I've been like practicing holding for specific targets, like specific sell size, specific buy size, specific fair value gaps. I got certain accounts I've been practicing holding for like longer targets. And then my other accounts, I still be, 15, 20 points. I'm out of there.
Gotcha. Hmm.
Mhm. It ain't got nothing to do with like the confidence level. It's just that I have a couple accounts where I'm practicing holding longer trades. But and the reason why I don't like doing that is because I I end up with money that I can't I can't draw out because I'll never let the accounts get to the point where I can take like unlimited amounts of money out of it. You know what I'm saying? Because I don't want to get to that point and they be trying to put me in a live
Live trader.
account. Yeah.
Hmm.
You know what I'm saying? So
Yeah.
when I be getting trades, when I be getting like 12 and $1,300 trades, it's like, now I got to get the account to a certain level to stay within the consistency, but then I can only take like $2,500 out. You see what I'm saying? So now
Yeah.
I got like $8,000, but I can only take $2,500 out. Now it ain't saying I can't never take the money out, but I got to keep trading another 8 days, then another 8 days, then another 8 days, then another eight. You see what I'm saying? Before I can, and like if I get, let's just say if I get like I can say like my balance is like $8,000, and I take $2,000 out, right? So now I'm over the buffer. So all I got to do is um do 8 days of making at least $150, and I can take another $2,000 out. You see what I'm saying? So, but it's like I got to keep trading to take it. I don't like just having money sitting there that I can't take out. Right. I usually try to trade if I'm gonna take out $2,000, I try to make around 2,300 dollars. So I can just take my 2,000 out. You know what I'm saying? So, but it's like I'm trying to like get myself back into the mind frame of only trading my own money. You know what I'm saying? Because when I'm only trading my own money, I can let it run to these targets. I can let it run to, if I want to hold it for 75 points, I can do that. If I want to hold it for 120 points, I can do that. Right. But and plus that like helps build the because I like when the trades be fast, right? If I'm in a trade, if I'm in a trade for longer than 15, 20 minutes, I'm going crazy, right? But it helps me to, what I'm saying, build that that tolerance, I guess you can call it, of sitting in trades for a longer time. Anybody
One
got
more
anything else?
question.
Oh, go ahead. Mhm.
During your trade, did you trail your stop loss? Or you
Always.
always? Okay.
Always. I'm always, and what I let me show y'all how I do that. Let me see. I always trail, right? Because I'm not give profit back McGee. I am not give profit back McGee. Seven. I think it's the seventh time. All right, let me come here. I think it was during this one here. Okay. So now I'm gonna come back more of this out. All right, I'm going out to a 15-second chart. All right. Yeah. All right, so I'm coming. This is my target here. That swing low right there. right? I'm looking at that swing low there because it's inside of this area here, right? I'm not anticipating it to go below this area here because I'm trading against the grain, right? And I got sell side here and I got sell side there, right? So that's my target right there. All right. That's gonna drive me crazy if I don't fix that. Okay. All right. So okay. So this is 7 o'clock. Right here is 15 second, and then we got a 15 second here, right? So we got a 15 second here. Cause I think I might have had this on the, I don't know if I had this on the screenshot or not. I put that the wrong color. I remember changing that. I don't know if it was on this screenshot or not, but I remember changing the name to 15 second. All right. So now we got that 15 second right there. Okay. And then, so we come up here, right? Boop, boop, boop. Go up there and we trade above the high right there. Then we drop down here and right here, right? We close there, closing that, right? Then I'm looking at this right here, right? To get short inside. Why am I looking at this to get short inside? Because, right, I'm anticipating a manipulation of sell side. Okay. I'm anticipating a manipulation of sell side. So we have come up here and we've totally closed in, right? This fair value gap that should send us up if we was continuing up, right? Closing there is showing me, hey, I don't want to go back up right now. I'm going to go get some sell side. And then we get the complete closure here below the entire inefficiency. So now, since this is a 15-second chart, on the 15-second charts, I'm always looking at the highest point that price can go back to, right? So we got a fair value gap and a volume imbalance there, right? This is our entire inefficiency, but I'm looking to get short off of the volume imbalance, right? Because it's a 15-second chart. And that also gives me a very little amount of risk, right? Right. It's giving me less than 6 points of risk. So since it's less than 6 points of risk, I can go in with more than one contract, right? Because it's less than 6 points. So I can go in with more than one contract there. So I'm going in with 2 contracts here, right? Then once we come down here, now what are we doing here? We're not defending the lower half of this 15-second first presentation, right? So it's showing me weakness right there, right? And then we get a closure below, right? So now we got the inversion here. So now that we got the inversion here, right? We don't trade back up into that SIBI right there. We break down, we take out that low right there, right? And we set relative equal lows there. So when we trade back up here into the 1 minute, right? When we trade back up into the 1 minute, I add a contract right there, right? And when I add a contract there and we drop, right, I'm moving my stop here, right, from up here, because now we've broke structure and we've used the fair value and we drop, right? So it's like Stop was there. Once we broke structure and I add that contract and we drop, boom, I put my stop here, right? At consequent encroachment of the 1 minute, right above that high. When we formed this order block right here and we drop there, I put my stop right there, right? I moved it from here to here, right? Once we got that order block, traded above the order block there into that. And when we came back down, that closed right there, right? I moved it there. I will say that was a little premature. I usually don't move it until we take out that low. But since we had such a huge drop here, right? As soon as we wicked above that and closed back, I immediately, boom, put it right there because we've come so far. I'm Save Profit McGee, right? So when we trade back up there, drop down, as we drop down here, right? When we stop there and close there, I took one off, right? I took one off because I was like, if we start coming back up, right, I want one to be there, right? And then we drop down and hit the target right there. No, matter of fact, I took another one off here. When we wick back up there, I took another one off there, and then the last one. But when I took another one off there, right, I took my stop and put my stop above the fair value gap right there, right? So I wick down, stop, took one off, right? Wick down, took one off, move my stop above there, and then right, because I'm using the points where I'm like, okay, if we come back above this, I don't want it no more, right? I'm using the different points. Order block, I don't want it no more. Fair value gap, I don't want it no more, right? Because it's like I'm protecting the profits.
Thank you.
All right.
Nice.
Is that a smiley face? That was at 750. Talk about here. Talk about right there. Hmm? Yes. Yes. It becomes a smiley face here, right? I'm entering before it's actually confirmed, right? But once we trade there, this is the entry based off that high not being taken, right? Because, right, we got the high, right? And then once we come down and take out that low, now we got the high right there, right? But this is the, like, once we make this candle here, that's the high, but trading below that low, that's like the confirmation of that high right there, right? So this is the entry based off that being a protected high. I'm getting in early based off the fact that we've disrespected a bullish PD array, right? We've taken sell side, we've displaced away, right? But this PD array is not pushing us higher. So now I'm anticipating a deeper level of liquidity being taken. So when we retrace back up into this area, I'm shorting here with very minimal risk, right? Because the algorithm wasn't showing me a willingness to leave right here, right? And then once I get down here and get the confirmation, I'm adding on right there because now we got a protected high and we've broke structure, right? And we've come back into an inversion fair value gap, first presentation on the 15-second, right? And we're coming into a 1 minute SIBI here, right? We got a lot of bearish confluence here to take us down to a certain level of liquidity. And when I look over here, right, we got this liquidity here, right? But this right here is the level of liquidity after this range right there, right? So come all the way down there and take that out, right? That's taking out all of this sell side here, right? Because this right here already took out the majority of it. And this is the only sell side left without breaking structure. So since it's not showing me a willingness to go, I'm looking for a deeper retracement. Any other questions? Every time I say I'm not going to be in front of y'all long, I end up in front of y'all a long time.
It's okay, we don't mind. That was
Okay.
excellent, Tim.
Can y'all see how it's like the lower time frames do the same thing? They do the same thing. Only thing is with the lower time frames, right? You like I automatically anticipate like deeper retracements on the lower time frame. Like on the 15-second, I'm always looking for it to go fill every nook and cranny on the 15-second. Sometimes I'll be missing entries on the 15-second cause on if like I'm not taking it here if I'm trying to short. I want to short up here. I look for it to fill every nook and cranny on the 15-second. All right. Because when you're looking at like a 1 minute time frame, right? Let me see here. Let's go to 1 minute. Let me hold up. All right. So let's find a minute candle. The end of a okay, so this is the start of a minute candle here. Wait a minute. Okay, so that's 707. Uh-oh. That's 706. All right, so 706. All right. That's 2 minutes right there. We'll look at 2 minutes. All right. Now let's go to 1 minute. Right. See them wicks? All right. See them wicks on them 2 1-minute candles? That's the 706 and 707 candle. Right. That long wick right there. Right. And let me just highlight the wicks. All right. Let's go back to the 15-second. All right. See there? So, and you see that there? This bottom wick, where that bottom wick it came down into that volume imbalance there, right? Coming down into that order block, right? So this right here is that bottom wick from that candle closure to that candle low. That's that bottom wick on this 1 minute candle over here, right? And then this right here from this candle open up to that candle high, that's the top wick on the next candle. Bottom wick, top wick. This bottom wick, what is it doing? It's coming all the way down into that volume imbalance, into that order block. This top wick right here, what is it doing? It's coming all the way up, repricing that volume imbalance right there, right? All the way back up to that volume imbalance, then coming down, right? Creating that top wick, right? Because that was the open and that was the high right there. That was the close and that was the low, all right? So bottom wick, top wick. And that's why when I'm looking at the lower time frames, if I'm looking for an entry on the lower time frame, I'm looking for the highest or the lowest volume imbalance that I see in that leg. If I'm looking for something to retrace, I'm looking at the highest volume imbalance. All right. If I'm looking for it to retrace down, I'm looking for the lowest volume imbalance because I'm looking for this 15-second time frame. It's going to be creating them wicks on that 1 minute time frame. Just like this 1 minute, like these 1 minute candles here, you know what I'm saying, it can potentially be creating wicks on these 15-minute candles. All right. Come here. Like that there. Right there. Then go back down to a 1 minute time frame. Right. That right there is that wick. That's the open. That's the high. That's what created that wick right there. Then that right there is wherever it closed at, over here somewhere. I ain't got enough information in there. Right. Need another that's 13. That's where it closed at right there. So it closed there. That's the close and that's the low. Right. So this right here, that move there, that right there is the bottom wick. Right. For that 15-minute candle right there. Right. So on the lower time frames, all this movement here is creating wicks. Right. All of this retracements moving. That's what we talk about on every retracement and expansion. Right. That right there, that's a market maker model right there. Right. From that low back down there. Right. If we go down low enough, right, if we go down low enough in price, right, yeah, market maker model. All right. Right, come there, span up, manipulate out the lows, smart money reversal, low risk short, last stage of distribution, complete market maker model. All right. Every expansion and retracement is a market maker model on some time frame. All right, man. If ain't nobody got nothing else, that's all I got. Hopefully y'all found some value in this. If y'all ain't find value in this one, hey man, I promise you, I'll do my best the next time to, give you something that you can chew on. Give you something you can chew on. All right, took out the weekly high on top of the weekly high. All right. Market maker model still in effect. I think I took off my buy side, but that's all right. All right, man. I appreciate y'all for hanging out with me. That's all I got. If y'all ain't got nothing else, appreciate y'all for tuning in to Tim's Tidbits. If you got something out of it, please like, comment, subscribe, and share. If it's your first time tuning into Tim's Tidbits, you probably not here no more because we done been on here for a very long time. Tomorrow is Wednesday, so we got tape reading with the diamond members. Right, we got tape reading with the diamond members. So diamond members, I'll see y'all at 9 for the tape reading session. For those that don't know what I'm doing, I'm just updating my chart. For tomorrow. It's March 3rd. So that open is 611 even. And the close over here is 603.75. Uh, Bush knew the opening gap. You see that right there played out nicely. Asian assassins, where y'all at? All right, what we got there? All right, trade away from the range. All right, all right, we trade away from the range. Bounce back up, took out some buy side, came up here, took out buy side from there. So we traded away from the range, took out buy side, crossed over the range, took out sell side right there. All right, that's our high. Then that's our low right there. That was our range there. All right. So we've taken out sell side. Right. You could have used this to trade it back to a new day opening gap. Right. Or we came up here and we hit the buy side. Once we hit the buy side, we trade it back down, right, into the fair value gap, into the inversion fair value gap, trade it back up to the buy side, right? Nice little scalp there off of the fair value gap. That's inside the inversion fair value gap, right there. Right there, nice 20 point, 21 point move, right? Played out beautifully. Shout out to Asian Assassins. Right. Uh, yeah, like I said, I ain't got nothing else, so I'm just updating my chart, so y'all free to go. Y'all free to go. I'm just taking the time to do this now because when I get off, I'll be like, I still got to update my charts. And I got to sit down and update them. But sit there and update it while I'm still on here. And it's not so bad. Not so bad at all. All right. You're welcome, Michelle. Shibu Inu in dog. Shout out to Jim. Yes. You gave us all the sauce. Okay. Yeah, Shiba Inu, the yin yang. Was it the yin yang? Shiba Inu and the OTE. Was that the names? Shiba Inu, yin yang, and OTE. Hey man, for those that stuck around all the way to the end, I appreciate y'all. Again, Diamond members, I see y'all in the morning for the tape reading session. Everybody else, I'll see you tomorrow at 6 for the price action recap, and let's lifestyle lifing. Yeah, that's it. All right, man. Till the next time I decide to get on Algo's internet and share my thoughts on this thing that we like to call price action. It's your boy, Timothy Roger Sr., aka Aranya Grande. That just means big spot. If you don't hablo español, y'all be safe out here in these trading streets, man. Gone.